Good morning, it's UPB from OptionMillionaires.com. Cisco Systems getting mauled this morning, down over 10%, dragging some of the tech stocks with it. And you can see I was talking about this back in August when it declined post-earnings. It looks at the 5-year weekly chart. You can see this $26 resistance line. It's acted as resistance in the past. Each time hitting this line over the last, actually you go back 10 years, declining 60 to 50%. And now we're back below that line, reported earnings again, and you can see I was talking about this back in August when it gapped lower. And I said this was make or break back in August because we're at this $26 line. Each time it's hit it over the past 10 years has declined 50% from this level. So we're looking at a move to about $15 for Cisco Systems long term. That's a pretty crazy call. Of course, in a centrally planned marketplace where every central bank is printing money, inflating asset prices, we might not fall that far. So it's a stock you want to avoid buying calls, even though some of the analysts are coming out today saying, oh, it's still an attractive investment. But we'll stay away from it. But we'll move into earnings that we have this morning from Walmart. And I was talking about Walmart in the chat room at OptionMillionaires.com. This megaphone top, it's a broadening topping pattern, meaning the price is starting to widen as it consolidates between the highs and the lows instead of a narrowing that we would see with a pennant pattern. Pennant pattern, the price would narrow. It'd be the inverse of this, and that would be bullish. But since it's a megaphone top, this is bearish. And pointed out how we could see downside, put it up at StockTwits as well. And I think a move down to about $71 is possible. And so what we're seeing now is about $77.50, $1.50 move to the downside. Nothing much to really make some money trading the puts. But I think ultimately we can head down to the bottom of this broadening top, this megaphone top, and then if we break through it, we could be seeing downside at about the $67.50 level. If you look from a longer term perspective, we could almost, if that does indeed happen, we'd be looking at a head and shoulders pattern. This would be the left shoulder and head, but that's a long ways off. Something to keep an eye on. That's what I like to look at when I look at charts. Keep patterns in mind as far as a longer term perspective because they're more reliable than shorter term charts. Let's look at coal stores. KSS is also declining. So we have Walmart down at about $77.50 level. We have coal stores getting destroyed, hammered. It is down over $4.75. Was down much more than that, down $6, over 10%. Coal stores was not really letting on via the long-term chart that it was topping. Actually, it broke out of this channel to the upside. Look bullish. So charts, while they give you a lot of information, don't always tell you the whole story. And we see coal stores actually not looking for good numbers going forward, and that's why the market's selling it off this morning. Coal stores getting hammered pretty good. Look at Solar City, upgraded this morning. This is a stock we talk about a lot at OptionMillionaires.com. About a month ago, we got into the coal contracts. Woo! When the stock was at $38, the 41s, 42s, just off. It was off the chart. It was a nice gain. So Solar City is a great stock to trade out of the money options, especially trading into week's end when we have weekly options expiring. Solar City is up significantly this morning, up over $4, an 8.5% move, something like that. The options are going to look pretty when the market opens this morning. Solar City breaking out. If you look from a long-term perspective for Solar City, you can see it put it in a beautiful bull flag consolidation, and we have a nice candle here. This is a weekly chart. Obviously, it hasn't been trading for 5 years, but the weekly chart, the longer-term perspective, usually more reliable than the shorter term, and it looks like it's going to break out to new all-time highs within the next couple weeks. How about the S&P 500? Look at this rally we've had since 2009. We're still way up there. And you can see each of these yellow circles indicate a pullback. Each of the pullbacks have been a V bottom. I was expecting a possible pullback this week. Not happening. And you can see now the market is broken above it. I brought this up in the chat room in the forum at OptionMillionaires.com. The breakout above this resistance line. And then ultimately I said this green line and this resistance would be a tough nut to crack. Tried to crack it, came back down, fell below it, and then once we busted through it late in the session, it was a buying orgy. Free lap dances for all. And we ramped to new all-time highs. And then even after the close yesterday, I'll pull up the S&P 500 futures, just kept rallying. Look at this is the close right here, and just kept going and going and going. We were yelling. Oh, speaking of yelling, Yellen's going to be the new Federal Reserve chairwoman, and she's going to be speaking today. And Of course, she is more dovish than Ben Helicopter, throw dollars on the market, Bernanke. We're going to have to come up with a name for Yellen. We yelling for, I don't know, yelling for cash. That's not a good one. All right, let me move on. Let's look at the QQQ because that is the NASDAQ ETF power shares. And you can see it's actually not doing so well as the S&P 500 because we have Cisco Systems kind of dragging it down. Goldman Sachs just now, ding, 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 across the wires. Goldman Sachs removes Cisco from the company's buy list. Is that what it said? Conviction buy. Oh, it's a conviction buy until it isn't. Isn't that great? It's great being an analyst. Goldman Sachs. It's like, oh, they're going to be great into earnings. Here we go. And then all of a sudden they tank and they're like, well, not so good. I'm going to take them off my conviction buy list. It'd be like a weatherman. I threw this up a lot. It's like, yeah, it's going to be bright, sunny day tomorrow, nice and warm. Don't bring your jacket. And a hurricane comes through and knocks you off your feet. Whoa, I was wrong. Sorry about that. So let's move on. We have Google. Google just off of all-time highs. What a beautiful session yesterday for Google. If you bought the calls, nice. Off the lows, it was a $27 move to the upside. And you can see Google, from a charting perspective, still, and I'm going to bring up my support resistance lines here, and you can see it bounced off long-term support. It just keeps going. Let's see, oversold. It's pretty oversold from the RSI here, about 83, but it's can still continue the upside. And look, usually when Google gets oversold, it just keeps getting oversold, right? It drops back to about 75. Bing, bing. So if you look from a longer-term perspective, you can look at the market as well. A lot more overbought conditions than oversold. Google has not been oversold since the middle of 2011. Overbought, should I say. Oh, no, oversold. Oversold, I'm right. So if you want to, it's funny, you get the bearish blogs. They're like, yeah, here we go. Google's going to drop. Overvalued. Why is anyone buying it here? Look at the S&P 500. Same thing. Yeah, how many times has the S&P 500 been oversold since the financial crisis, right? Once. One time. What was that? The debt downgrade? Was this October? No, it was August, yeah. The debt downgrade in the middle of 2011. That's it. So yeah, I understand the short, the bears and the short traders' perspective from the market because the jobs aren't there. Nobody's got any money except the rich. But look at the market. How can you fight this trend? So anyway, all right, UPB here. Let me move on. We have Apple. Apple looks very bullish to me from a chart perspective. We have that W bottom. We're flagging here as well. And I think even if the market does indeed pull back, Apple will not. Apple's going to head up to the $600 level before year's end, possibly new all-time highs in the near future for Apple. We have the volatility index falling, getting sold off seemingly every day. Bonds, this is what everyone's talking about. Oh, bond yields. Oh, no. Bond yields start to rise. Market's going to tank. We heard this, SPY 160, 165, 170, 175. We're almost at 180 now. It's like every kind of bear that comes on. CNBC, it seems they have an opening 3 times a month for the same person who's been wrong 3 times a month since 2008. So, Maria, the market is going to tank here. Interest rates are rising. This is going to make it more expensive for the big companies to borrow money cheap and buy back stock and issue dividends to all the rich shareholders. We're going to fall here. Back at the start of the year, one analyst, not an analyst, I don't know. Yes, the music, it's stopping now. I'm going to grab my chair. Yeah, normally when you're playing that game of musical chairs when you're 7 years old, yeah, it's funny how analysts on CNBC talk about musical chairs. I mean, that's a game you played when you were 7, right? This is the stock market, okay? Billions and trillions of dollars here at stake, and you're talking about musical chairs? Meanwhile, that person got into his musical chair. Oh, I got my spot, but guess what? The music's still playing. The music's on. Guess what happens when you sit in your chair before the music turns off? You lose. You lose. But in this marketplace, when the music keeps playing and you sit in your chair, guess what? You get to come on CNBC an additional time each month. So now it's 4 times a month. It's like, hello, hey, it's Bob Johnson at AccountZero.com. I can take your money and turn it into zero by shorting this market and calling a top every day until I'm right. Sign up now. Watch me on CNBC. All right, UPB here. So are we going to get that market pullback? Who knows? But look at this chart. Every pullback has been a buying opportunity. I've been saying it at optionmillionaires.com until the cows come home. Every time I get on there, this dip, every dip we had, I said, every dip since 2009, March 2009, has been a buying opportunity. Short at your own peril. All right, UPB here. Obviously, I'm not on CNBC. If I was a loser all the time, I would be, but unfortunately, I'm not. All right, UPB here. Goodbye.